current and future driving forces behind global trade. Topic of my conversation today with Marc Gilbert. He is managing director of the industrial goods and consumer practices at Boston Consulting Group. Hello, Marc.
Hello, Bob. How are you?
Good. Thank you very much for being with me today. So what does the latest BCG report tell us about global trade growth over the past year? What's the big picture?
Look, the big picture is that, yes, there was a drop in trade in 2020, but it was only 8%. And I say only because we had, and the WTO had predicted more drop in trade last year. In essence, it's a GDP story. There was a faster recovery in the second half of 2020, which led to a lower decline, still an 8% decline, but we had predicted a higher decline of trade. So 8% drop, primarily due to a stronger GDP recovery in the second half of 2020.
Was there expectation of double-digit drop at some point by you and others, or was that dire?
In the darkest of days around April, we had predicted nearly 20% drop.
Oh my goodness! Oh, yeah. So this is compared to that. This is rosy. This Correct. Is good picture. To the extent, though, that we're now starting to see continuing problems from the Delta variant of COVID-19, the potential, if not the reality yet, of future lockdowns and sheltering in place, stuff like that. What do you see for 22 and 23 for the coming 2 years in the report?
Yeah, great question. We I guess we're more bullish. Yes, Delta's in the wings right now, but we predict the trade will go back to the absolute level of 2019 by the end of 2022/early 2023. And then from 23 onwards, we expect it to continue growing roughly on an average of 2.5 to 3, call it 2.7% to be precise, in all corridors except for one, which is US-China, where we're continuing to see year-over-year absolute declines that are increasing over time. Honestly, there's a gradual transition underway as we look forward to what we call Global South, where China and ASEAN countries, ASEAN and EU, ASEAN and USA, and even EU and Africa are increasingly prominent in trade corridors and trade mix. So while overall it'll grow, it'll look different over time. This takes years, but that's a bit of an outlook where we expect by the end of 22, early 23 to be back to the 2019 levels.
ASEAN, the Association of Southeast Asian Nations. So you're not looking at any marked reshoring of production back to the United States in that forecast, it sounds like.
Well, there's a trend underway. Many talk about decoupling, which is quite systemic and bipartisan. It was underway before the pandemic. It continues to play itself out. While at its root, it's technology driven. It's quite systemic and covers many types of goods. We've already seen reshoring start to take place, and many manufacturers and importers of goods have started to look for alternative sources other than China, and there is a reshoring play underway. It takes time. It's happening. It started happening before COVID, and it's going to continue going forward.
How much do you weigh the factor of the tariffs that were placed on Chinese imports under the Trump administration, at least at this moment, are being maintained by the Biden administration as affecting trade levels between the U.S. and China?
It's certainly playing into it. There's no indication that the tariffs will be lifted. By all accounts, the current administration is staying steady and firm on the prior administration's policies, we can call it that. And that's just continuing to, in essence, support our perspective that there will be, of all trade corridors, the only one that will be declining year over year over the next decade is US-China.
Do you look into the degree to which these Southeast Asian countries can produce on the scale that China has been producing, China and Taiwan also up to this point? Can they handle that increase in production, infrastructure-wise and logistically? Great question. The reality of today is not entirely, but they're learning fast and they're investing heavily. Even Chinese state-owned enterprises are investing in Southeast Asia to be able to offer an alternative source of supply that is not China-based, but is still within sort of the China enterprise. So these investments are taking place, and the Southeast Asian geographies are awake to this and are seeking to build up the scale necessary. It's a slow process. You don't move capital equipment overnight or make capital investments that quickly.
Some
Yeah.
sectors will move more rapidly than others.
Or move the supporting network of suppliers that second and third and fourth tier suppliers that have to accompany that move as well.
Correct. Correct.
I'm interested in the factors that you look at as possible actors of change in going forward. To what extent do you examine the possibility of geopolitical strife, especially in the case of China, as having an impact? And do you have kind of some what if scenarios if those things come into play and how it might impact trade growth?
Yeah, great question. We look at five main factors that could affect sort of the evolution of trade over the coming years and, in fact, coming decade. One is the shape of post-COVID recovery. I mean, that's really a GDP story, and we see it today. It's quite varied across the world. It's a bit dependent, of course, on government stimulus, and every nation has its own practices and policies. Also, it depends a bit on how effective the nation is at preventing vaccination spread, or sorry, at preventing infection spread or with the vaccination rate. So there's a whole shape of the trade evolution that will depend on the post-COVID recovery. That's factor one. Factor two is the one you highlighted, which is the change in geopolitical dynamics. It was already underway. It continues to be underway. It's not like it used to be in the world of Bretton Woods when you could just trade globally and go to the WTO and get your disputes resolved. It's not looking that way going forward. Therefore, the predictability of the global trading system is much more difficult and much more fickle. The third one, which we've talked about, is the pace of decoupling. We can't hide it. It was happening pre-COVID. It's continuing. It's US, China, and it's affecting the rate at which trade will evolve. And it could accelerate or decelerate. One thing for sure, it's not going away. The fourth factor is, call it the emergence or lack of emergence of trade agreements. I mean, the EU just pulled out, or at least put a hold on their EU-China trade agreement. That would have been a big blockbuster trade agreement that was put on hold. Such changes are quite dramatic. If they happen, it'd be different. If it doesn't happen, it's already different. So that's a fourth factor to consider. And then the fifth one, I call it COVID related. It's government policies for self-sufficiency, national well-being, strategic independence. You know, sectors to watch: medtech, pharma, semiconductors. We saw India ban export pharmaceutical products, a bit as a result of COVID, also under geopolitical strain. So there's so many factors. Those are the five factors. There's the speed of recovery, geopolitical dynamics, decoupling, lack of or new trade agreements, and then government policies that could emerge.
That covers a lot. Let me address the trade agreements for a moment. You mentioned what the EU is doing with China, and the dispute resolution mechanism within the WTO basically has no teeth at this point. But it stands to be potentially replaced by the new Trans-Pacific Partnership, the TPP, and China's own involvement in yet another Asian-based trade agreement. Do you think that those multilateral agreements hold promise for boosting trade, or might they be a barrier to it, or where do you factor those in?
Well, first, I think most of us hope and wish that the WTO will find its way and reestablish itself so that it does have teeth. I tend to agree with you that it's lost a bit of its effectiveness and efficiency in managing trade disputes and so forth. But we do believe that plurilateral and multilateral trade agreements is likely the new normal. And it's yet to be proven whether or not they will have the right institutional force to be able to navigate trade disputes. It's to be seen, but we do believe that nation to nation or nation to multiple nation agreements is probably the new regime going forward. Like RCEP, RCEP is a great example of China striking a deal with Southeast Asia.
Yeah, that's the one in which China is involved, as opposed to TPP where it's not. But who knows?
Correct.
Maybe it'll be part of that too. China, of course, is exerting its economic force over the world increasingly with its own with its Belt and Road project, with all the different investments it's making all over the world. I'm wondering how that might affect trade in general and the U.S. position in trading with its trading partners going forward. Can China maintain that level of investment, and how will that affect the future?
I think it's absolutely foreseeable, and it's in their plan to continue global investment. The dollars that they've invested in Africa are enormous. They're the single largest foreign direct investor in Africa right now. And the Belt and Road Initiative is a testament to that. It will shape trade, absolutely, which is also in parallel why there's less US-China trade going on, because China has realized it needs other trading partners.
Yeah.
And the US has also realized we need more self-sufficiency, for example, in semiconductors. So there's a real shift going on between the US and China and the world.
There are so many factors to consider, but Marc Gilbert of Boston Consulting Group said, thank you for laying them out so clearly as to what we might need to think about in terms of trying to make some kind of a prediction of what's going to happen to global trade in the years ahead. Definitely want to connect up with you with the next BCG report. But in the meantime, thank you very much for your time. I really appreciate your insights.
My pleasure. Hopefully we can do this again. Thank you.